What if the chaotic, emotional swings of the market could be measured? What if you had a gauge that told you when everyone was too scared or too greedy? You do. And today, we're not just looking at what it is. We're investigating the hard data on whether it can actually predict the future. This is the CNN Fear and Greed Index. It looks simple, but it's a composite of 7 powerful market indicators. Let's break down a few. Market momentum. Is the S&P 500 above its 125-day average? That's greed. The VIX. Are investors expecting huge swings? High volatility signals. Fear. Junk bond demand. When investors are chasing risky debt for yield, that's pure greed. Safe haven demand. A rush into bonds over stocks. That's fear. It's not magic. It's a mathematical pulse check on the market's psychology. So, the big question, is it a neat toy or a powerful tool? Researchers from Cork University Business School put it to the test. They used a statistical model called Granger causality, which essentially tests if one thing consistently happens before another. Finding 1. From 2011 to 2020, the Fear and Greed Index did Granger cause returns on the S&P 500, NASDAQ, and Russell 3000. It had predictive power. Finding 2. But there's a twist. In the more recent period, the relationship got weaker. The researchers also noted the effect was small, meaning you couldn't get rich off it alone after costs. The academic verdict? It's a statistically significant predictor, but not a get-rich-quick scheme. But what if you built a simple, rule-based system around it? Another team of researchers did exactly that. Their strategy was brilliantly simple. Buy when the index hits extreme fear 25. Sell short when it hits extreme greed 75. They back-tested this on major indices for a year. The result? All 7 systems were profitable. The French CAC 40 was a superstar, with a 72% annual return. This suggests that trading on these extreme emotions can be a viable strategy. So, we have 2 compelling studies. One says, yes, it predicts. The other says, yes, it can be profitable. Here's how you should actually use this information. 1. It's a context tool, not a crystal ball. Don't use it for day trading. Use it to understand the market's prevailing mood. Is it a time of irrational pessimism or euphoria? 2. Mind the extremes. The most powerful signals are at the extremes. A reading of 50 doesn't tell you much. A reading of 10 or 90 is a loud signal. 3. Combine and conquer. The pros don't use this in a vacuum. Use it alongside your own analysis of company fundamentals and technical chart patterns. It's the secret sauce, not the whole meal. And remember the academic caveat. The effect sizes are small. Profits can be wiped out by frequent trading and high fees. This is a swing trading or strategic tool. The greatest investors in history have all said some version of be fearful when others are greedy, and greedy when others are fearful. The Fear and Greed Index gives you a data-driven way to do just that. It quantifies the fear and greed in the room, so you can have the clarity to make a smarter, more disciplined move.